what if I told you that there was a way to introduce your children to the business that you've started, allow them to start building a good work ethic, and also potentially save on taxes along the way? Well, the great news is that there is, and today we're going to talk about what it looks like to hire your children for your business. Hi, I'm John Norberg, and welcome to the Financial Prof series. So maybe this is the first time you've heard of this strategy, or possibly you've seen it in a video somewhere or heard on a podcast that you can in fact hire your children for your business. And yes, it is a perfectly legal and ethical strategy that the IRS is pretty clear that they have no issue with, but there are a few common pitfalls along the way that we'll talk about too. So from a very basic level, it looks like this. Let's say you've got a child and you decide to bring them into the business. So you hire them and you can pay them, and typically what I see people do is they pay their child up to the single filer deduction limit for that year, which in 2024 year is $14,600. And the reason they do that is because then their child can take that full amount and deduct it. In other words, from a federal perspective, it is potentially tax-free in that case. And because they're paying their child from the business, it's obviously a deduction to the business. So this can be a really great way, like I said, to bring your children in, give them a good work ethic, and also start them on some spending strategies to help them get a lifetime of financial success potentially set up from an earlier age than perhaps others might do. What does it actually look like though from a pitfall perspective? Well, this is where I do see people trip up. Let's talk about 3 common pitfalls. So pitfall number 1, the age of the child in question. So what I've seen is that the IRS is pretty lenient about after age 7. However, you can, in certain circumstances, hire them on even substantially earlier than that. But what you want to do is make sure that the duties fit the age of the child. In other words, if I'm paying my newborn baby $14,600 a year, the IRS is going to look pretty suspiciously at that, because what is a newborn baby actually doing that's of value to my business? So that's where age 7 comes into play based on previous tax law. Number 2, actually coming from number 1, you can kind of see where this is headed, is what is the child actually doing for the payment that they're receiving? So you want to make sure that what you're doing is setting yourself up in the case of an audit where you can sit before the IRS with a straight face and say, yes, this is a legitimate expense because I'm paying my child for legitimate services rendered to my business. You know, for maybe a 5, 6, 7-year-old, this is simple stuff. You know, maybe sweeping the office, maybe shredding paper, helping stuff envelopes for mailers, things of that nature. For someone who's older, maybe the business has a social media page and they can start getting into that, or IT services of some kind, you know, helping make sure the computers are running smoothly, etc. These are just ideas of how you could help the child not only learn a new skill set, but also have a legitimate set of duties, which kind of leads into the documentation piece. You want to make sure that when you are hiring your child on, you have some sort of documentation that includes, ideally, a job description, as well as a rate of pay, so that when you're recording some kind of hours, they're actually able to see, the IRS is, what that child's doing, what the rate is, and how long they're doing it, so that, again, questions can have answers. And then finally, the other pitfall that I see is the business type not being taken into account when doing this. So what do I mean by that? Let's say if you're a C Corp or an S Corp, well, if you're a corporation, when you pay your child, there are going to be payroll taxes that come into play. So you can either decide that, hey, that's okay, I'm still going to save money on this, which most businesses are anyway, or there is a way around it, a little bit of an administrative burden and a little bit of a cost attached to doing so, but it's to set up a family management company, if you will, where that company is, say, a sole proprietorship or a disregarded entity of some kind. In that case, they're not going to have to worry about payroll taxes potentially, so that money now becomes fully deductible to the child from a federal perspective potentially. And what happens is your business pays the family management company for services rendered to the family management company by the child. And in that case, you can get around to the payroll taxes, again, from a completely legal perspective. This is a very legitimate strategy. But the reason not everyone does it is, again, there is a burden to doing so. So, again, the 3 pitfalls that I most commonly see are making sure that the age of the child is reasonable, particularly in the case of the duties that they're given and what they're rendering to the company in terms of services. Also documentation, again, things like making sure you have a job description and are recording hours and that it's reasonable for the child and their age. And then finally, making sure that the entity type of your business is taken into account when planning. This is especially important when you're looking at, maybe you have 5, 6 children that you're looking at hiring over the years. You want to set all this up right the first time so you don't have to go back halfway through and then readjust everything because, oh my gosh, we got audited and what happens now? So if you have questions about what this might look like in your case, or you're wondering, hey, is this a good fit for me and my business? Shoot us a message, drop us a like and a subscribe here on YouTube. We're happy to chat further with you and help you determine what is the best fit for you and for your business. And in the meantime, I'll see you out there.